Hello, Mark Sturdy here with another video summary of our work this week. And let's just look at the summary page and we'll see where we are. We remain bears of the dollar against the euro, and we are bulls of the dollar against the yen. Those are well established and we think continuing. We are bullish of stocks with a question mark over American stocks, but we're bullish of all the other indices. We're standing clear of bonds, and we are still bullish of gold. Let's quickly go through these. Dollar euro, we have a long-standing sense of the breakdown of various bull dollar trends and the beginning of a new trend, which is of a weak dollar against the euro. And we argue this closely here. We look more narrowly, more closely, the weekly chart, for example. It's actually been going sideways since the summer, but we think that this trend is still, because it's bounced twice off this band of support from these prior highs, we still consider this trend to be in place, even though there's no immediate drama. Obviously, we need a break of 1829 for the market to get going again, but it's still intact. There is no question about it. Short-term pause here and a pull back through 1655 may suggest more short-term dollar strength weakness in the euro, but for our money, the overall medium and long-term trend remains in place. Dollar yen too. This is rather more exciting because the long-term drama of the yen is the breakup through this very long-term prior high of 1998, 147.63, and the manner in which it's been able to break free of the turbulence around that level has been the creation of a triangle, which is now broken. Here's the triangle in more detail. This calls it up a good deal higher or lower in yen terms. Watch this level for additional buy opportunities, adding to dollars longs yen weakness. But for our money, it's already on its way. Turning to stocks, we are relatively, we no question about it, the US stocks are still in a trend, and they've broken, I've overdone it, they're still in a trend, but that short term, they've been going sideways for quite a long time, since the end of October, mid-October, and we need to have confirmation that there is not a weakness creeping in there. It's bounced off prior highs, so that the market is in no hurry to go lower, having bounced twice, but we need to have a breakout here before we can join the bulls, what most clearly we see the bullishness of the Euro stocks breaking through the 1990, 55.24, very important, also breaking up through and finding support from near-term highs, early 2025, more recently at 58.25. All this is good bullish price action. FTSE similarly has been in the grip of a pattern which is actually coming to an end, but that's the minimum move suggested, so that we think there's more. There's no reason to suggest this bull move wouldn't happen. It is worth bearing in mind that the catalyst for the FTSE move was not just the break up through these old year 2000 highs or year 1999 highs, but also the creation of the head and shoulders continuation pattern. That is now running out of steam, so worth remembering. Doesn't mean to say that the bull market's at an end, but it's maybe running out of steam. This is the important and vital breakup of the Nikkei through the very old 1980 or so 39,600 major chart. The catalyst for this was another triangle, and that is called, so that too has reached its immediate target or minimum target. So a pause did ensue then, but there's no suggestion that the market is running out of steam. Quite the contrary, it's gone sideways and then looks to be breaking up now again. Watch the level 52,740. All bullish. By contrast, trading ranges in the bonds are far from being. There is a possibility of a short-term lowering of rates. There's a short-term pause here that might be broken, but for our money, we're still in the middle of a trading range in the bonds. So to the UK gilts. Watch oil It was drifting lower and has now bounced back through the resistance from these two prior lows, suggesting quite a reaction. How far it goes on the upside, we don't have a feeling for. Gold remains bullish, very long term. As I've said many times, it's gone beyond the minimum targets of this triangle and this head and shoulders continuation pattern, long further beyond, but it's being sustained by the creation of continuation triangles. That it looks as if it might go further again, having found support on these prior highs in the very short term chart. Thanks very much.